August saw a continuation of the opening up of the global economy, which was strengthened by further positive economic data. This was led by the US, with strong labour numbers released for July. July jobs grew by 943,000, and we saw wages advance by 0.4% month over month. The Federal Reserve Chair, Jerome Powell, also reassured investors that inflation increases will be transitory or temporary in his Jackson Hole address, and that the timing of tapering for monthly bond purchases will start at the end of this year, and that's what the market expects. These bond purchases keep money flowing through the economy and promoting lending and also spending, and slowing them down will be the first step in moving policy back towards normality. Returns from global growth assets were driven by the US once again, but we also saw strong performances from Japan, but also emerging markets when put back into sterling terms. UK equities also made some progress as the final COVID restrictions were lifted, although daily cases have started to rise as we've seen the economy open up further. However, hospitalisation numbers have been kept under control due to the mass vaccine rollout. Now, it does seem likely that we will see some form of booster jab programme later in the year because Delta variant concerns do remain. Emerging markets have remained volatile, and this has been driven by Chinese regulatory changes. In terms of investment style, growth outperformed both small cap and value factors over this month. Turning to defensive assets, all major developed bond markets lost ground over August. Given the recent risk-on phase in financial markets, riskier high-yield debt and emerging market debt made positive returns over the month. So in summary, this month focus will now turn on to the next Federal Open Market Committee, starting on the 21st of September. And investors will be seeing what the Fed has to say about near-term direction, and this will set the tone for the markets in the coming weeks.